Hello, everyone. I'm Joe Furlong, and welcome to the AiCR Exchange. I'm thrilled to have a colleague of mine, Paul Raebel. He oversees our division of MIAC called Mortgage Delivery Specialist. Known him for more than 10 years. It's so great to have him on the call today. Paul, welcome.
Thank you, Joe. I really appreciate it. I'm looking forward to a wonderful discussion over this next half hour.
Wonderful. So, it's amazing with the mortgage industry. It always seems like, well, it's just residential loans, and that's not necessarily the case. Even if you look at the residential loan world, there's so many different chunks from it, from origination to closing to servicing to all this other stuff. But the one thing that a lot of people don't talk about is the delivery of these loans to the agencies or to another party or that sort of stuff. And in essence, at a high level, that's pretty much what you oversee. Is that correct?
Yeah, that's absolutely correct. Very simply, we assist clients with the sale or securitization of loans to Fannie Mae, Freddie Mac, Ginnie Mae, and generally that's the priority of the work that we do. And you're right, it's our area of expertise. It's our bailiwick, if you will, and it's something that I think, as importantly as anything, that I absolutely love doing.
That's fantastic. I mean, and ultimately, it's one of those things you can say in like 5 seconds, but I'm sure there's a lot of details that go into this process. It's not simply, it's just, hey, here's the loans, here, Fannie and Freddie or whatever, here they are, you're done. What are the core elements, or what are you guys doing and analyzing and preparing for these for sale? It must have a lot of details without spending the next 30 minutes going over it. But what information can you get to help the audience understand what is the process?
Well, I know you're right. I could spend 30 minutes answering just this question. So I appreciate your comment. I would say this. I would say that data drives everything. We know that. And we are exceptional at identifying what data is required, ingesting it into our system, identifying data anomalies, because at the end of the day, when we're talking about helping our clients to sell or securitize their loans with the agencies, with Ginnie Mae, we really approach it as if we're in the cubicle right next to them. We want to work very closely together, right? We're part of the team. I think more than a couple of clients have pointed out to me in the past the fact that I use the word "we" in our emails back and forth, because again, it's a collaboration. And I say that because it's not just the data, but for us, it's managing the entire process, right? So it's getting the data, but identifying the issues, the concerns, and working with the client to rectify those things.
Let's talk about that for a second. So sure. Issues. What are the common kind of issues or things that have created bottlenecks or slowed down the process? Can you kind of dive on that a little bit?
Yeah, I'd be happy to. And it comes in all various forms, I guess I should say. It could be data that is required to sell or securitize a loan. I'll give you a simple example, right? A loan's been identified as a condo. There are a number of data elements required by the GSEs when it comes to selling condos. And it could be that they're missing a condo project name, a condo type, a number of units. There are any number of fields, right? So there is the missing data that's required by the agencies to be able to sell or securitize a loan. And then there are those cases where there are data anomalies. You provided the information, but it doesn't make sense. You've given us 3 borrowers and 3 social security numbers, but 2 of them match. Something's wrong there, right? So it varies, I would say, with Fannie Mae and Freddie Mac, because there is a significant number of data elements that are required to be able to sell or securitize the loans. I'll take a brief moment just to share. Most of the listeners would probably be aware of this, but in 2011, Fannie Mae and Freddie Mac adopted MISMO. And as part of that, those MISMO standards, there was a considerable number or additional number of data elements required. So in time, there's a lot more that can be missing or that could be anomalous as far as the data is concerned. So getting back to your question, it varies. The data that's missing and inaccurate varies. I will say on the FHA, VA, USDA side, we see a lot of cases where we're missing upfront MIPs or a USDA case number that's invalid.
How do you solve these problems? I mean, you just can't. I mean, is that something you have to collaborate with the client? Does the client do it by themselves? You look at docs. How do you solve these?
With that, we go back to the client very simply. And I love where this is going as part of the conversation. So we'll go back to the client once we've ingested the data that they provided to us. And I'll say that it can come from various sources. Some clients send one file, some clients send 5 files. It matters none to us, but we ingest the information into our system. We do data validations, and then we'll send a report back to them, simply a spreadsheet. Here are all the issues that we're finding in the data, with a description of how it needs to be rectified. And then we'll work with them. Generally, they will go back and extract the information from their documents. They'll send a report back to us, or they'll complete the report that we sent to them with the data corrections. We'll load it into our system, and then it's iterative. We'll run it to make sure that the data's clean and complete. And that's a huge part of the process.
So, okay. It seems like you can, once again, you can say it in one second, but yet it's a lot to do. I mean, is there any time where things can't be solved, or does delivery ever fail? I guess that's the question. Can that ever happen?
It can happen. It can happen. And certainly we will do everything that we can to prevent it. And I'll step back just a little bit into the process. Is one of the things that we do, as I mentioned earlier, data drives everything, and it really does. But one of the things that we do is also manage the overall process. So we'll talk to the clients and we'll start with, when do you want your securities? When do you want the cash? Let's work backward from that date to make sure that we are ensuring settlement is timely. And we do that, Joe, because we want to mitigate as many issues as early in the process as we can. And of course, again, it all starts with data. In answer to your question, yes, there are times when we've identified missing information that's required, and it may have not been populated on the origination documents. You can't, that's not an easy fix. It could be a case where a borrower may not have signed a document that they needed to sign. We've come across that periodically with modifications to loans, where interestingly enough, they had a modification, everything looked pretty, but the borrower hadn't signed in the dotted line. So yeah, there are cases where a pool could potentially collapse because you have to remove a loan and the pool falls below Fannie, Freddie, or Ginnie Mae pooling requirements. So yeah, it certainly can happen. It doesn't mean a trade will fail, but it changes the dynamics of the trade.
All right. So that was a mouthful right there. So let me kind of go in a different direction, but it's very similar. So besides the normal, okay, they originated the loan, they want to deliver it, vanilla kind of everyday kind of action. There are things like you touched upon it, loans that are modified, maybe the VA EARL, I hear all the time, maybe early buyouts, those things that are more unique and different. Can you touch upon, to the best you can, what are the differences and how does that impact what you do, and making sure that the client needs to be mindful of these unique circumstances need to be handled slightly different or be aware of? What are how do we avoid the traps where problems would exist?
They do. You're right. There are traps. There are pitfalls potentially. A big part of what we do to mitigate that, or really not even mitigate it, but to prevent it entirely, is to make sure that we are fully aware of the requirements for delivery. So it's not just getting the data, but it's also guiding our clients as they ask questions, that we're able to guide them through those situations where something may not look or smell right, for lack of a better way to put it, doesn't pass the sniff test. So the way that we can mitigate those things, first of all, is to ensure that we know requirements and that we have conveyed that to our clients. It's a matter of managing expectations too. So we know that, with a VA EARL and FHA Streamline, you are not necessarily required to provide a DTI. So we know things. So we have to be very careful and pay close attention to those circumstantial situations that we can guide a client through to ensure that they are informed as much as we are informed. And again, that's just to manage expectations and the overall process. Did that answer the question, Joe? I'm not sure
Yeah.
if I.
Yeah,
Okay.
you did great. Well, do we want to talk about early buyouts? Does that even touch you at all? I hear that all the time. Early buyout this and early buyout that. Does that hit your world at all?
I love early buyouts.
Tell me
And
about it, because
we
you hear it all
do-
the time, but a lot of people, like, you hear it, but like, do I really know what that means and the consequences? Why would somebody do it, and what's the consequence? Can you talk about that a little bit?
I can. And we do a lot of EBO, early buyout redelivery work. And this is a case where our clients have purchased loans out of existing Ginnie Mae pools. They've been delinquent for 3 consecutive months. They have the option to repurchase the loan. They could, of course, decide they want to continue to remit the P&I. But when they are repurchasing those loans, generally they're going to follow one of two paths. They will become a reperforming loan, or they will go through a modification. They'll typically go through a trial modification. The borrower has demonstrated that they're able to make the new payment based on the modification. And those loans at that point are ready to be repooled, to go into new Ginnie Mae pools, resecuritized, if you will. I love working with those because they are, for lack of a better way to put it, they're not your standardized cookie cutter types of deliveries. There are additional data requirements. And again, with my background, with respect to not just deliveries, but my fascination, for lack of a better way to put it, Joe, with data, it works perfectly for us. We have designed and built a lot of rules around EBO loans because you've got the modification in addition to the original loan, and pooling requirements change, data requirements change once a loan is identified as EBO.
Is it the reason why lenders or investors buy these out? Is it so they don't have to do the advances on non-performing loans anymore? And also when they redeliver it to a new pool or securitization, they actually get that upfront premium again? Is that the economic motive behind it? Or is there something more that I'm missing?
I think that is the economic motive behind it. It is. And I guess I would say that especially with modified loans, you may have bought out a loan at a slightly lower rate as it was in the pool. And this is going to sound counterintuitive. And there are ways to approach this that issuers use. But generally speaking, it's going to be modified at a much closer to current market rate. So that loan really, from a rate perspective, wouldn't necessarily be underwater. Now, there are other circumstances that go along with that. Clearly, if a rate goes up, a payment may go up, and that could cause some distress for a borrower there. But there are ways to manage that issuers take into account when they're resecuritizing. And of course, the liquidity with putting these loans back into securities and being able to trade them as well.
So it seems like there's an immense amount of complexity in this process. And not only having someone like yourself that really knows it and understands the complexity, but also has the strong relationships with the agencies so you can actually help facilitate this delivery. I think it's a combination of everything. Is that a fair statement? Like, it would be much harder for someone that may not have all the pieces, the technology, the experience, the relationships to be able to do what you do.
You're absolutely right. And I touched on this just briefly before. We didn't really get into it. But one of the things that we do is manage the entire process. So as I said, it's not just getting the data and spitting out a file and saying, here you go. It's managing and knowing where to go if we have questions or concerns. If a client asks me a question and I can't answer it, even after 30 plus, I'm not going to give the exact number, or that will give away my age. But after 30 plus years of doing this, I still don't have all the answers. And I love that. I love the learning aspect. But I know where to go and who to talk to get the answers. I know where to go at Fannie Mae and Freddie Mac and Ginnie Mae if I have questions. And it's fascinating to me when I do have to do that. Go back to one of the GSEs, how often the people I'm talking to there say, I've never been asked that before. I'm not sure how to do that. So we jointly learn something new. But we manage the whole process. And so it's also identifying for our clients, for the sellers, Fannie Mae, Freddie Mac, the issuers on the Ginnie Mae side, that there is a process that we have in place that needs to be followed. And it keeps everybody engaged, from the secondary who's doing the pooling or allocations of the loans, to the shipping people that are going to be preparing and sending the collateral to the document custodian, to the document custodians themselves, where we will gladly work with the custodians to ensure that they're able to certify the loans and or pools in time to ensure settlement. And then after that, it's easy to say, well, certification's been done. They're going to get their loans funded. But guess what? There are still servicing and investor reporting people that need to know that, hey, you've got loans that were identified as portfolio loans are now moving over to Fannie Mae, Freddie Mac, or Ginnie Mae. They need to move them to a new investor code in the servicing system. That needs to be conveyed to them. So I think maybe a little bit longer answer to your question is there's a lot that goes into it. Yeah, we are delivery specialists, but there's a huge component to the overall aspect of things that we'd love to manage, to guide, to walk people through the whole process.
So it's not just data validation. It's clearly making sure all the counterparties are understood and on the same page. It's also making sure the documents that can convey to the right spot and need to be done with the custodian, etc. There's also then facilitating the trade and then actually making sure the funds get remitted and all the business sides of it. There's a lot that goes into it, and having, for lack of better words, a quarterback, as you would be in this analogy, to be able to manage all these pieces is really critical. And if you're not doing it, I guess it could fall apart or make it, a lot more difficult to close. Am I understanding the whole process at a high level?
Perfectly, Joe. Perfectly. And I love the quarterback analogy because that is critical. And having the huddle, getting everybody into the huddle and talking about, here's where we're going to go with this. And just to continue your analogy, different guys are running different routes. Well, those may be the secondary folks that are putting these securities together. And it could be, as I said, the shippers. It could be any number of people. We all need to be on the same page, and we're all working towards that common goal, that touchdown. Again, I love the football analogy in case that wasn't obvious.
Well, except for
something we're both passionate about.
Well, you're a Green Bay guy and I'm an Eagles guy, so that's going to be a problem. But outside of that, I'm with you.
Yeah, but we've never held that against each other, Joe. So.
No. We definitely do not. At least not seriously. So, obviously you made a joke that you're not going to say how long you've been in the business, but you and I are very similar. It's been 30 plus years we've been both doing what we've been doing, a long time. So much has changed over the time frame. And I don't want you to go back 30 years from now, but even look at the last 3, 5, 6, 7 years, or even 10 years. What has changed in your world? What are the new things that are meaningful that weren't meaningful 10 years ago?
Can I go back just a little bit, Joe, past 3 years? Because this
Whatever
some of the
do.
may find this interesting, and I'll try to keep this short. When I started in this industry at MGIC, we produced we received data from clients back then. I would say primarily we were working with Wall Street firms to help them with their sale or securitization of loans with Fannie Mae and Freddie Mac. And the reason I bring this up is because the term tape, which is used today to describe a spreadsheet, really was a tape 30 some years ago. So
I remember those days. I remember
much work to clean the data. There really wasn't a process to do that. I would say we started that. We may have been one of the early adopters of identifying issues with the data, and you would write it out to a text file that then would be written to a tape. And I'm talking about the big reels that would be put in a box with a label and mailed to Fannie Mae and Freddie Mac. So very simplistic process, manual. And, that was life. But so when people hear tape and you explain it to somebody who's new to this industry, I don't know if they realize there really was a tape, right?
We actually had those conversations all the time. We were saying it's not a tape anymore; it's a data file. But still, it's right. Old habits are hard to break, right, Paul? They're very
absolutely. Where do you want me to upload the tape? We hear that all the time. So, fast forward a number of years. So, fast forward from the late '80s to the early '90s to 2011. When Fannie Mae and Freddie Mac in December of 2011 I believe it is, adopted the MISMO standards. Now you had not only a whole new file form and an XML file, which for those people that are listening have seen before, they're pretty funky looking files, but a significantly larger number of required data elements to be provided to. And part of that is a function of reporting requirements as they have changed. Those different things that Fannie Mae and Freddie Mac are required to report on. So there's a significantly larger set of data that's required to sell the loans, and a much deeper dive into that information, a lot more editing, a lot more auditing done up front, meaning you're putting the loans together and you're loading them into the various softwares, but then also additional rules that are run behind the scenes once those have been submitted to or whole loans. I'll call it contracts or commitments, depending upon if you're talking about Fannie or Freddie Mac. Fannie Mae and Freddie Mac just recently, going back last year, I think August of 2025, they had what they call their phase 5 requirements. So from time to time, new requirements are added to the specifications, the data elements, the requirements to sell loans to Fannie Mae and Freddie Mac. So it has changed significantly over the time that I've been in the mix, for lack of a better way to put it.
What is the typical time frame? Everything remaining equal, the data's good, it's more of your most consistent, easy job. What kind of time frame from the time the client calls you to the time they get their funds for the settlement? What are we talking about?
It varies. It depends upon a couple of things. And part of it, quite frankly, is the responsiveness of the client. We have some clients where on the Ginnie Mae side, we turn things around in about 30 to 35 minutes, maybe an hour, might be pushing it. And that's because we get the data in the very same format every time, which of course enables us to run our auditing. And there's the data is clean, takes minimal efforts to get it cleaned up. By the way, we also look at the pooling. It's not just the data, but hey, do you have your loans pooled properly? That's part of what we do. It's identifying that. And then it's getting the data file back to the client if they're going to load it into the software, or if we're going to do it ourselves. It can be, I'll say, maybe an hour. In other cases, if it's a much larger group of loans, and if it's a client, I'll say this: that there are, with clients that are purchasing loans through correspondent channels, there may be more challenges from the data perspective. Those clients can't manage the data quality the way they could with their own retail originations, right? So in those cases, there may require more effort to turn around to get the data cleaned up. What I would say is this, Joe: we act as if we are sitting in a desk, a cubicle, whatever it is, right next to whomever it is that's calling us. They're standing up, looking over and saying, hey guys, we need to get these out the door. Here's the settlement date. Can you get working on this? And the answer is yes. Yeah. I don't ever want to be the reason that a settlement date is missed. Yeah. I treat these transactions as if they are my own. So everything has a sense of urgency. However, we have a very standardized process that we don't deviate from. And that's because it's worked for 30 plus years. And we're not going to cut corners to get something out faster. We're going to stay true to our process and ensure that we have a happy client at the end of the day. So I hope that answers the question.
It did. I mean, it seems like it's such a complex process to be able to put it in a nice little cookie cutter is almost an impossible thing. But ultimately, I think you've answered it beautifully. So let me ask you, if there's one bit of advice you can give originators, investors who want to deliver to make this go as smoothly as you possibly can, what would that one piece be?
Get the data cleaned up as early in the process as possible. If there's a way to do it, if you can build in a process to even do it pre-close, that's even better. And you can still run loans through various Fannie and Freddie software applications, but get the data cleaned up very, very early in the process. That really drives everything.
And there's a great application out there that help you extract data right from documents. I think it's called AiCR, if I'm not mistaken. That works really well in your process, I suspect, right, Paul? Shameless plug.
I am glad you went there, Joe, because you're absolutely right. I wanted to make a comment about this. So this is the perfect opportunity, and I appreciate that. There's human error. We know what happens.
Yes.
So despite our best efforts, much of the information that ends up in an LOS is being manually entered. So we know there are going to be issues there. Yeah. But having AiCR, where you have the ability to extract the data directly from the documents and then put it into literally any data format that you like, that's significant. That speeds up the time, and certainly it's going to help at a minimum with the missing data that we see so often, and certainly invalid data as well. That's a game changer. If you're able to do that up front, get the information loaded into your LOS, take the loans at whatever interval you'd like, pull the data out of the LOS and run it through Fannie Mae or Freddie Mac software. Ginnie Mae doesn't offer quite the same, but get it cleaned up. And that is going to really help ensure clean delivery down the line. And it's certainly, as much as I love digging into the data and helping people clean it up, that makes my job easier. It means that I can turn things around faster, and we know time is money.
I could tell you over the decades I've been doing this, I've always focused on my biggest asset is the data and the quality of that data. And for decades, I would go into places, speak with people, and they wouldn't give two hoots about their data. And I'm thinking to myself, you just don't get it. And I think now people are starting to see that and saying, okay, the data really matters. I need to do what I need to do, get it cleaned up as early in the process as I can. But still, even to this day, there's still people that don't put the focus on the data. It's almost like it's a derivative. They don't care about it. And it amazes to me on that attitude. If they just clean their data early up and have it done, everything else downstream gets better. Everything.
Unquestionably. And when you're selling loans to Fannie Mae and Freddie Mac, they have what I would call a naughty list, where they are going to identify for each seller their top 10 issues with their data.
Wow. And
of course, conscientious sellers are going to do whatever they can to mitigate that. And it's nice that they know, okay, we're consistently missing this or providing it, invalid or inaccurate data. They can work to mitigate that. But again, go back to identifying these things and loading complete data into your LOS early in the process is significant. And the other thing is there's reputational risk too. You don't want to be the one who's known for having poor quality data, especially if loans are being sold and then re-underwritten. You don't want to find out that there are issues or concerns with it. So it's significant. It mitigates. I guess that's the simple way to put it.
So I'm going to tell a quick little story that I just discovered literally 45 minutes ago. So I've known Paul for more than 10 years, and he just told me that he has this issue with electronics. He goes and he gives his wife the TV remote because he can't turn the thing because whatever, he has this electric field coming out of them. And a story with his one colleague about the monitor not working because he was pointing at it. It was weird. So I made a new nickname for you, Paul. I'm going to call you Magneto for the rest of your life. So everywhere you go, there's an electronic field around you and you do things. So I thought that was a cute story.
Yeah, that is so true. I can't believe you went there, Joe, but yeah, I like the nickname. I'll own it.
Magneto. So, Paul, I can't thank you enough for your time. If someone wants to reach out to you, I'm assuming you have presence on LinkedIn. Is that the best way to get a hold? How does someone reach out to you?
Absolutely. Reach out to me on LinkedIn. I would love to have an opportunity to talk. And I'll say this, even if there's not an opportunity for us to work together, if you're struggling with your deliveries, if you have questions, I'm happy to be an available resource. I'd love to connect. I'm always looking to learn more. So
Wonderful.
Certainly, LinkedIn is perfect.
Well, Paul, thank you for your time. And everyone out in the audience there that watches this video, I appreciate you lasting this long. If you want to follow us on LinkedIn, you can go with AiCR or just go Joe Furlong. Both channels gives you a lot of information. And until the next episode, which is in 2 weeks from today, enjoy your day. Enjoy that. And I'll see you to the next time.
Thank you, Joe.